What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about the spot price of silver still sitting in the $22 an ounce range, along with the possibility of a market crash. The stock market is deep in the red today so far, but I have a couple of reasons why it could potentially get worse. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Come and join us in the Precious Metals VIP Club for giveaways, live streams, deal alerts, and a whole lot more. You can actually watch Friday, Saturday, and Sunday's videos all right now if you want to. And of course, make sure to go and get your 5 free stocks by downloading Webull and funding your account. Time is running out. Refer one friend and they're going to give you 10 free random stocks for the referral. Time is really running out. And if you refer 2 friends by the end of the month, Webull's going to give you either a free share of StarBucks, Apple, or Google. Everything will be linked in the description. So today is Thursday, May 5th, 2022. Happy Cinco de Mayo, or as I like to call it, Happy Cinco de Stacco. The spot price of silver, as I'm filming the video, is $22.88. It's down 7 cents today so far, or down 0.31%. A mild red day for the beautiful white metal. Spot price of gold is $18.95.20. It's up $12.90 today so far, or up 0.69%. Fairly decent green day for the beautiful yellow metal. And of course, the gold to silver ratio is in the 82-to-1 range. But of course, that's as I'm filming the video at like 10 o'clock in the morning, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. So today, I wanted to talk about the spot price of silver still laying pretty low. And even though gold is up a little bit from where it was yesterday, gold is laying pretty low as well. And I think this is a pretty good opportunity to take into consideration going and acquiring some more of the coins, rounds, and bars. And speaking of the coins, rounds, and bars, look what we have on display today. We have a Buffalo round, a Texas round, a Florida round, a Sunshine round, a Peace Dollar round, a round of an eagle carrying an American flag, a 5-ounce Aztec calendar round, an American flag bar, Westminster bar, 5-ounce Sunshine bar, and a nice little pile of 90% junk constitutional Washington silver quarters. And over here to the side, I have a couple of others as well. We have a Britannia, we have a Krugerrand, we have a Maple Leaf, we have a Type 1 Silver Eagle, a Type 2 Silver Eagle, and of course, a Kangaroo. So in this video, I wanted to talk about 2 different things for the most part. I wanted to talk about the market potentially crashing, a couple of different reasons why we could see the stock market really begin to suffer, but I also wanted to talk about the spot price of silver laying pretty low right now, and that's where I wanted to start. So let's talk about the silver. Spot price right now, like I said before, it's in the $22 an ounce range, premiums excluded, of course. Premiums included should be around $26 and change, because the average premium right now is about $4. Many of you go to your local coin shop and you can get yourself either a generic rounder bar, maybe some 90% for roughly $4 over spot per troy ounce. Way better than the online precious metal dealing websites. Forget them. Support your local coin shop. T-shirts and hoodies available in the DYDSS store. If you don't want anybody knowing what LCS stands for, let them know it stands for locally canned soup. But the spot price of silver is quite a few dollars lower than it was, especially maybe 2 or 3 weeks ago. I remember posting a video when the spot price was actually beginning to climb a little bit, and I didn't expect silver to climb up into the $26 an ounce range, and that was just last month. Silver was $26 an ounce last month, which means the stack price, spot price with the premium included, was about $30 an ounce, give or take. Silver's come down a little bit since then. Gold has come down a little bit since then as well. Gold was in the $1,900 range, and it's just a hair below that today. But especially earlier this week and last week, gold was quite a bit lower. It was closer to $1,800 than $1,900, and that's exactly what I like to see. I love seeing the precious metals laying low. I love seeing silver. I love seeing gold move in a downward direction, of course, in the short term, in a very slow manner. I don't really enjoy flash crashes. I don't really enjoy when everything just tanks out of nowhere, because that really garners way too much attention, at least in my opinion. I've seen it happen time and time again. If all of a sudden, silver just drops by a decent amount, it gets on too many people's radars, and all of a sudden people who weren't really paying attention to silver are now all of a sudden paying attention, or the people who weren't really, maybe they were preoccupied worrying about something else, maybe gold or maybe some of their investments or whatever the case may be, and now all of a sudden they're like, oh, silver's on sale, and they dive into silver. Meanwhile, the rest of us who are actively stacking silver on a regular basis, we're obviously going to be going after silver, because why not buy the dip, and why not, especially if we've been stacking for quite a bit of time at the higher prices. Now we have the opportunity to do two things at once. Number one, lower our average cost, which is always a nice thing to do. But two, and more importantly, increase how much silver we have in our possession. So now all of a sudden, the people who are already stacking silver continue stacking silver, and the people who maybe lost interest in silver or weren't paying attention to silver, now all of a sudden they're focusing on silver, and that's when we start to see the premiums really go up, because the stacking demand is going up, and that's not what we like to see. We want lower premiums, and we've been dealing with higher premiums for the last 2 years. They have dropped down within the last year. I've definitely noticed that, and most people have noticed that as well. But right now, silver doesn't really seem to be on too many people's radars. Right now, it doesn't seem like all that many people, or it doesn't really seem like the stacking demand is as high as it was maybe this time last year, which is definitely good news. As a contrarian, that's exactly what I want. I want as many people as far away from what I'm focusing on as possible. And I also wanted to come back to this. We will return to talking about silver and gold, but I also wanted to talk about how the stock market is behaving today, why it is so deep in the red, and why I personally believe it can get much, much lower. We could potentially see a stock market crash, and I'll tell you why that is. But first, check out how the stock market is behaving today. We have the S&P 500 down 2.13%. We have the Dow Jones down 1.67%, and we have the NASDAQ down 3.17%. Massive red day so far. Keep in mind it's 10 o'clock in the morning as I'm filming this. God only knows what the rest of the day is going to bring us. But I wanted to talk about this today for a couple of different reasons, because I personally believe that we could see the stock market really begin to struggle. And also, by the way, just for reference, Monday, Tuesday, and Wednesday were all three green days for the stock market. Yesterday was a little bit of an exception. Yesterday, it was actually a red day that turned green after the whole Federal Reserve announcement. So for the most part, from 9:30 in the morning up until maybe 2:30 p.m., we were pretty much in the red. Not by a lot, but we were in the red. And then after that, we just took straight upward direction. Today, on the other hand, at least as we're opening, market's only been open for about 30 minutes. For me, as I'm filming the video, this video is going to be coming out long after the market's already been closed, so let me know in the comments how the stock market ended up closing. But as we opened up, we're down by quite a bit. And while we're on the topic of the stock market, before I explain the two big reasons why I think we can see a market crash, I just wanted to give everybody a friendly reminder to go and get their 5 free stocks by downloading Webull and funding their account. Normally it's 2. They bumped it up to 5 until May 16th, so you only have a couple of days left. Capitalize on that while you can. You can deposit any amount. You can deposit as little as a penny, and guess what? It still counts. You still get your free stock, so capitalize on that while you can. If you refer one friend to the app by May 11th, very time sensitive. They're going to give you 10 free random stocks for the referral. It's part of their advertising budget, and you can do this 10 times, by the way. You can refer 10 people by May 11th, and they're going to give you 100 free random stocks. You only have a couple days left. Make the most of this. And last but not least, if you refer 2 friends to the app by the end of the month, you have like 3.5 weeks left to do this. But if you refer 2 friends, Weeble's going to give you either a free share of Starbucks, a free share of Apple, or a free share of Google. It's completely random. You get what you get and you don't get upset, but you win either way. Starbucks right now is roughly $80, $75, $80 a share. Apple is roughly $160 a share. Google is roughly $2,300 a share. Again, it's completely random, but you win no matter what because you get something either way. Webull link in the description. Time is running out. Don't pass up on an opportunity. But now, I wanted to talk about 2 main reasons we could see the stock market really begin to suffer. We can go into just straight downward trajectory mode. We could be seeing 3, maybe even 4 red days a week, maybe even 5 red days a week after week after week. It's possible. Stranger things have happened. That right there has been the case many times in the past. But I'll tell you exactly why I think that could potentially happen. It's 2 things. Number 1, the Federal Reserve continuing to raise rates. That's one reason right there, and I'll explain why in just one moment. And 2, if we continue down this path and we see 2 consecutive quarters of negative GDP growth, which means we're in a technical on-paper recession, that would send the stock market in a downward spiral as well. So the first one I wanted to talk about would be raising rates. Now, a lot of people think that when the Federal Reserve raises rates, it inherently causes the stock market to fall. That's not true. That's not really connected. The reason the stock market falls is because what happens in between. When the Federal Reserve raises rates, all that means is that it now costs more money to borrow money. Borrowing money is no longer free. We had 0% interest rates for the last 1.5 years or maybe even 2 years. People, businesses, and massive corporations got very, very, very used to being able to borrow money for free. This means they were able to spend or invest in their business or make acquisitions or grow at no cost to them. All of a sudden, now that interest rates are going up, you kind of cut that off. So now all of a sudden, borrowing money isn't free. Now all of a sudden, borrowing money costs money. Which means people, businesses, and massive corporations retract from doing so. They'll continue to do so, but much less, significantly less, because now it costs them money to do so. And if companies are borrowing less money to put back into their business, which leads to them growing at a slower pace, that means we're going to see less growth in the stock market. And if companies and if stocks are not 10xing in a week or 10xing over the course of a couple of months, it's that slow, gradual incline, which is what we're supposed to be seeing in the first place. But people got way too used to rapid, massive growth. People who have no idea what they're doing think that that's normal. That's going to scare them away. All of a sudden, they're not seeing crazy, massive, instant gratification returns. And people are going to be putting less dollar bills into the stock market. So it's 2 birds with 1 stone at that point. The companies themselves are not growing nearly as quickly as they were when they were borrowing money for free, so they're not growing that way, and less people are buying into the stocks because of that lack of growth, or lack of rapid growth, I should say, which would send us in a downward direction. And then, of course, the other reason would be if we get to that point of falling into a technical on-paper recession. See, a lot of people think we're in a recession right now. We're not. We don't have that negative GDP growth. People are spending. People are working. But if that were to change, if we were to see 2 consecutive quarters of negative GDP growth, if we were to see companies have less money to work with lay off more people, hire less people, that means the companies could potentially be going through some financial hardships on their own. But think of the workers. Think of the people who are looking for jobs and can't get jobs. Think of the people who have jobs and are now losing their jobs. Now all of a sudden, even less people are working. And if less people are working, less people are spending. Remember what happened toward the beginning of 2020? Remember the initial crash, the initial shutdown of absolutely everything? Remember the initial loss of all quote-unquote unessential jobs or non-essential jobs? It was a lot of people. A lot of people that I consider to be essential workers. I'm not going to go down that rabbit hole, but I think every worker in the country is essential to the economy. I don't think there's such a thing as a non-essential worker. But anyway, you remember when that originally happened? Remember how everybody went into hardcore frugality mode? Remember how all of a sudden people got their paychecks taken away and they didn't know how in the world they were going to buy food for their kids, or how in the world they were going to pay rent, or how in the world they were going to gas up their car, or if they even needed to gas up the car because now they've been stuck in a house for the last 3 weeks, 3 months. People didn't have the currency to work with at the very beginning before we started stimulating the economy, which ended up turning into us overstimulating the economy. Before that happened, remember how nobody was spending? Remember how massive amounts of stores were shut down? In a recession, when people aren't working, they're not spending. Because if they're not working, they don't have the currency to spend. They barely even have the currency to take care of the essentials, let alone the non-essentials. If they're having a hard time buying food, do you think that they're going to be going on vacation? Probably not. And if we were to fall into that technical on-paper recession, if we were to see 2 consecutive quarters of negative GDP growth, if all of a sudden people start getting laid off, if all of a sudden people are having immense amounts of difficulty finding work, they're not working, they're not spending. And if they're not spending, the big, giant, massive corporations hurt even more because all of a sudden now they're seeing a decline in revenue, which would send us into an even bigger downward direction. So those are just a couple of examples of what could lead to the stock market falling even more. Of course, we're seeing a massive red day today so far, but it's important to remember we're coming off 3 green days, especially yesterday. Yesterday was a bigger green day than today was a red day so far. So just because the stock market is down massively today doesn't necessarily mean that we're crashing. The entire week so far had been moving in an upward direction for the most part. Today's an outlier, and again, who knows what the rest of the day will bring us. Maybe by the time the market closes, we'll be back in the green. Maybe we'll have 4 green days within the week so far. God only knows. Only time will tell. But I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to the silver, when it comes to the gold, are you in acquisition mode right now? Are you playing more financial defense with the silver and gold? Are you playing more financial offense, maybe with business stocks or real estate? What's your focus right now? What are you dialed in on right now? And with the spot price of both silver and gold laying kind of low at the moment, and with the precious metals seeming to be off of a lot of people's radars, they haven't really been catching the attention of too many people right now. The stacking demand, I would say, right now is probably the same as it was a couple of weeks ago or a couple of months ago. I don't think silver slowly dropping down from 26 to 22 garnered all that much attention. And with that being the case, are you focusing on the precious metals right now? Or are you not too worried about them? Head on down to the comments and let me know anything and everything related to today's video topic. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs. A lot of the products are helping us raise some funds and awareness for different charity organizations, by the way. DYDSS store, will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month, live streams multiple times a week, deal alerts on silver and gold almost every single day. You can watch all of my videos early and commercial free, and you can watch Friday, Saturday, and Sunday's videos all right now if you want to. And every Saturday morning I post a brand new adventure vlog. The one that I just posted was really interesting, and the one that I have coming out this Saturday is also really interesting, so you're going to want to go and watch that. And there are a ton of other perks as well. VIP Club link in the description. I guarantee you the value exceeds the cost. And of course, last but certainly not least, make sure to go and get your 5 free stocks by downloading Webull and funding your account. Normally it's 2. They bumped it up to 5 for the next couple of days, so capitalize on that while you can. You can deposit any amount and it still works. You still get your free random stocks, because that's what I did. If you refer one friend by May 11th, just a couple of days left, they're going to give you 10 free random stocks for the referral. It's part of their advertising budget. Rather than wasting currency on billboards and TV commercials, they reward their users for helping them build their app with them. And you can do this 10 times. By May 11th, if you refer 10 friends, you'll get 100 free random stocks for the referrals. Capitalize on that while you can. And of course, make sure to refer 2 friends by the end of this month. You have about 3.5 weeks left. And they're going to give you either a free share of Starbucks worth about $75, $80 right now, a free share of Apple worth about $160 right now, or a free share of Google worth about $2,300 right now. It's random. You don't know what you're going to get, but you get what you get and you don't get upset. They're all fantastic. You win no matter what. Don't pass up on an opportunity. Webull link in the description. Time is running out. If you don't want the stocks, go and get them anyway. They're free. Then congratulations, now you have the cash to go and get you some silver or maybe some gold if that's what you want. Webull link in the description. And I want you guys to head on down to the comments and let me know once again, what are your thoughts on everything shared in today's video? When it comes to the silver, when it comes to the gold, when it comes to the spot price of the precious metals being on the slightly lower end right now, and with the precious metals seeming to be not really on everybody else's radar right now? Are you in acquisition mode? Are you focusing on picking up as much silver and gold, maybe the coins, rounds, and bars, as you possibly can right now? And then when it comes to the stock market, maybe you're a little bit more focused on playing financial offense at the moment, and you're focusing a little bit more on stocks, and you're taking advantage of this massive red day. Do you think that more red days are to come? Do you think that the Federal Reserve continuing to raise rates will inflict even more pain on the markets? Do you think that as we get closer and closer and closer to potentially recessionary times, do you think that's going to cause some punishment or inflict some pain on the markets? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.